In today's training, we are going to look at data entry for a cash flow plan in Voyant. I'm going to start at the home screen and we're going to navigate down to our plus button in the bottom right hand corner. From here, we're going to select the Create Client option and we're going to go ahead and enter in our client's first and last name, their date of birth, and then we're going to select a plan start date. This is going to be the date that the plan starts, and just keep in mind that Voyant works in full planning years, so that the date that this plan starts will be the date that the second planning year begins. So if this planning year starts in 1/1/2025, the second planning year will start in 1/1/2026. State of residence is going to apply any state taxes to your plan. So for example, if your client lives in a state where any income taxes apply, this will let the plan know to apply those appropriately. Let's go to that, and then we're going to let the plan know whether or not our client is or is not retired. And if they're not retired, we're going to give them an estimated retirement age. This can always be changed at a later date. I'm going to click Done to save, and then from here we're going to open up a plan in Voyant. And once that is opened up, we will have some options to add in additional information here, again with our plus button in the bottom right hand corner of the plan. So let's go ahead and continue to add people into the plan. You'll see this people tile here, and we're going to add in Jane's spouse, John, his birth date, and then since we're in the same category, let's use this drop-down option, save and add another, and add in their child. Now that we've added in all the people in the plan, we can click on the people section of the plan here and see all of the people that we've added in. And then I wanted to point out these default surplus accounts that are automatically created whenever you add a person into the plan. These are nominal accounts that the software uses to hold surplus funds. So if any of your clients ever have any one-time inflows like an inheritance or the sale of a property, these accounts are nominal accounts that will hold those funds until you tell the software where to put them. Next thing I wanted to point out is plan settings. So if you go into here, these are going to be the assumptions that underlie your client's plan. These are just defaults for the software. These are not recommendations by Voyant. I would definitely recommend going in here and setting up defaults of your own that you feel are justifiable and defendable. If you have any questions about what any of these are, we do have inline help. Anywhere that you see these underlined items, you'll have some inline help here that you can click on and get more information about what these items are and how they affect different items in the plan. And then you can go through each of these and make your own adjustments to them. You'll be able to see the federal tax brackets, the state tax brackets that apply based on the state that you entered whenever you entered your clients in the plan. You can build out asset allocations, market assumptions, major loss settings if you wanted to do any custom major loss modeling in your plan. And then under liquidation order, just keep in mind that this is how your software is going to automatically fulfill expenses in retirement. These can be adjusted if you'd like. You can even bring over specific accounts if you want to, but just by clicking and dragging. And then savings order is going to be how different accounts are optimized for savings. And then in calculation settings, just keep in mind that excess income is automatically assumed spent, but you do have the ability to toggle on different options here if you choose to. So go through here and just double check that these are the settings that you'd like, and then click Done to save once you're done. And then depending on your client's situation tax-wise, go into taxes and other financial information. Standard deduction is going to be the automatic default, but if you're dealing with a higher net worth client, you might want to turn this off. And also, depending on their situation, you have the ability to turn on or add itemized deductions and tax credits. All right. The next thing I want to do is start adding in some options on our timeline. We're going to go next to our timeline here. The timeline is the framework for the plan. The timing of everything is based on events in Voyant. Anything that happens in a particular year needs an event. This is also a nice place to bring your client to show the key life events over time in their plan. Some events are added automatically, like these retirement events. Those were added whenever we told the software that they expect to retire at age 65. And then you can click on these and adjust the ages if you need to at any given point. Same with the mortality events. These are defaults that can be adjusted in the plan. And then if we want to add additional ones, we go down here to the plus button and we can add events. We can also simply click on the timeline and add them. At age 75, I want to add a slowing down event. I want to use this to be able to step down some expenses in the plan later. You can add any event icon that you want or just use this default one that comes up. So I'm going to add in that house icon and call this slowing down. Actually, I'm going to use the boat. And then I'm going to save and add another. And then at age 55, I'm going to add in one for a remodel. And on this one, I'm going to use the house. And then for goals, these are going to be trackable expenses in the plan. So these are going to be things that we want to use as things that our clients are working towards. So some things I like to use for goals are going to be what they are hoping to be able to spend in retirement, things like just general living expense goals for retirement or travel expense goals for retirement. So let's click our plus button in the bottom right hand corner, go to goals. We have a special retirement goal here that we can use. We'll give this one a name, retirement living expenses. And we'll give this an amount of $50,000 a year, and we'll keep this priority level as basic. These are just going to be their basic living expenses. You'll notice under here on timing that this automatically defaults to when they retire all the way till the end of the plan. And then if we click save and add another, we can also do one for travel that is separate. And we'll give that one a $20,000 a year goal. I'm going to move this to leisure because I want this to be prioritized below their basic living expenses. And then under steps, I want to step that amount down at age 75. I want to go to add a step, and then let's cut that in half at age 75. I'm going to go to timing and select that event that we've already created. And so what that tells the software to do is that for the first several years, first 10 years of the plan, we're going to spend $20,000 a year. They're going to be traveling quite a bit. And then at age 75, we're going to cut that amount in half. They're going to be traveling quite a bit less starting at age 75. We're going to click done to save. And then one more goal that I wanted to add is this remodel here at age 55. I'm going to my plus button and goals. We're going to go to the milestone goal, and that's a one-time expense. We're going to do a kitchen remodel. They've told me $30,000 a year. This is also going to be a luxury goal, meaning that it is not just a basic everyday expense. This is something that they want to do as long as they have enough money to do it. We're going to go to timing and select that event on the timeline that we already created. Set that as our start event and click done to save. Now you'll notice for all of these goals right now, we have 0 out of 25 years that it's met, or 0 out of 1 years that it's met. That is expected because we haven't entered any assets into the plan yet. So I do expect this behavior to occur. And if we go over to dashboard, we can see a bunch of red in the plan, and that's the red from these expenses that we've entered. It's all shortfall as of right now. Same with this kitchen remodel expense here. And this is all expected behavior because I haven't entered in any of their assets yet. One other expense that I want to enter is just their everyday pre-retirement expenses. I like to enter these in just as general expenses. I don't personally think of these as goals, but you as the advisor can determine how you want to enter those in. So I'm going to go to expenses, multi-year expense, and I'll just call these pre-retirement burn rate. and we'll call this 50,000 a year, and I want to go to timing and make sure that those end at retirement, so we're not doubling up their expenses since I've already entered in that retirement goal. And I'm going to click done to save, and we should see some red now in the retirement years from those expenses. So just to review what we're seeing right now on this cash flow chart, we are seeing their pre-retirement expenses with a bump up in the year that we do that remodel. And that's the expense from the remodel of $30,000. And then we'll see this blue line that's denoting this luxury expense from the remodel. And then in retirement, we're seeing an increase in their expenses due to that extra $20,000 a year in the travel. And again, we're seeing this blue line, and those reflect those leisure expenses that we have in the plan. And then you're seeing a little bit of a bump down when we do that step at age 75 because they're spending about $10,000 less in travel expenses all the way till the end of the plan. All right, now let's enter in their income. We're going to go to plus button, income, and we're just going to do employment for Jane. So we'll do Jane's income, and her income is $85,000 a year. And I'm going to do save and add another, and we'll do John's income. And his is $80,000 a year. And we're going to click done to save. And what we should see now is some blue in the plan, and that reflects their inflows from their employment income. So we can see now, just by hovering over the chart, all inflows. If we turn on the details, you can see what that money is coming from, and it's from employment. All right, next, let's enter in some of their assets. Going to their plus button, and we can see this savings and investments section. Savings and investments is going to be things like checking, savings, high yield savings, and taxable brokerage accounts. So let's go to that. And this one is going to be a joint account. So I'm going to add in John, and this is going to be their emergency fund. Let's do a balance of $50,000, and this is in a high yield account. So I'm going to adjust that interest rate. They're not currently making any contributions to this account. It's fully funded for them. But under withdrawal limit, I want to make sure that we are not using this to fulfill any expenses. This is a true emergency fund. I'm going to go to under type, do not allow, because I don't want the software to use this to fulfill any expenses. And then under save and add another, I'm going to also enter in an investment account. This is going to be a taxable account, and I'm going to call this brokerage, and this is going to be $100,000 in here, and they put $25,000 cost basis. The fee rate on this account is 1.5, and they put $250 a month in here. And once you add in a contribution, it's going to prompt you to update the timing on those contributions. We're going to say plan start to retirement is the time period which those contributions are going to occur. And then under growth, I want to put this into a portfolio. You can either do a fixed growth or a portfolio model. So I'm going to use a portfolio, and I'm just going to use this portfolio that I have saved in here, and I'm going to click done to save, and I'm going to go ahead and enter in their retirement accounts. One thing I did want to point out is now that I'm in the retirement years and I have entered in an asset, the software is now trying to find funds to fulfill expenses in retirement, so that whenever we hover over this bar in the chart, you can see that now that I have an asset, we're using some taxable accounts to fulfill expenses until that account runs out. So you can see just by hovering over the chart with the details button on what account they're using first. Let's go now to our plus button and enter in our qualified accounts. You can enter in qualified accounts under this retirement section, and it is important to enter these in under the retirement section because these accounts will have the appropriate RMDs and tax treatments hard-coded into them. Let's go into the 401k for Jane and enter hers in. 401k. Jane, and then she currently has $200,000 in this account, and she is contributing 1% of her income, and it is 5%, and her employer is matching that. So they are matching her contribution 100% up to 5%, and it's linked to her income. And I'm just going to leave the growth at 6%, and the beneficiary is John. And you can adjust the spousal inheritance option if you want. I'm just going to leave it at spousal rollover. And then I'm going to hit save and add another. And we're going to do John's. And John's is a Roth 401k. So I'm going to do John's Roth 401k balance is $600,000, and his balance is $300,000, and he is doing a percent of income 6%. 100% is in the Roth, and the employer is matching that at 5%. All right, we're going to click done to save that, and you'll now be able to see in the dark blue we've got the 401k that's under retirement savings. That's going to be used first because of the way we set up our liquidation order. And then in the light green, we've got tax-free savings. That's going to be the Roth 401k, and that's used last because of the way we had our liquidation set up to use the tax-free account last. Let's go now to Social Security, and we'll add that in under retirement. That is going to be here, and you have a few different options. You can estimate from their current income. You can use currently receiving benefits, use monthly statement, or if you have a spouse who's not working, you can also select use spousal benefits. I'm going to have Jane estimate from income, and we'll have her start her benefit at age 67. And same for John. We're going to estimate from income and have him start at 67. Once we've entered that, you'll be able to see the Social Security benefit in purple, and you can see that here, the chart, just by hovering over it in purple. Let's go now to our plus button again, and we're going to add in a property. Call this main residence. We'll give this property a market value and a purchase value. This is not a future purchase. This is a home that they already own. You can adjust the growth rate here. And then one thing to note is that if you are modeling something like a rental property, you do have the ability to model depreciation on this property. And then it is important if you are modeling properties to link the debt to this property. That way, if you ever do sell it, the software will know to pay the debt back out of the proceeds and also to stop that mortgage payment. So let's click debt, add mortgage. And then we're going to add the balance and interest rate and how much they have left on that debt. You'll need to note whether or not the interest is tax deductible and click done to save. And then it'll automatically factor in that payment as an expense into the plan. So you'll see your total need line will automatically increase. And if you want to go into year view, you can now review what your total inflows are in any year, as well as your expenses. So you can see the withholdings and the taxes for any given year, your contributions into any of your accounts, as well as that mortgage payment, and then the pre-retirement burn rate that we entered for the total expense breakdown, as well as the total amount here. In the investments section, you'll be able to see the net growth rates, the end of year balances, any contributions you're making into those accounts, as well as any withdrawals that might have been made. Same for the retirement section. You can even open these accounts up and see greater detail into what might be going on. You can see the contribution sources. So if you wanted to see how much is being contributed from Jane's income versus the employer, you can see that, as well as the asset allocation. Property, you can see the debt versus the value of the property and any equity. And in the taxes section, you can also see a breakdown of their taxes. The beginning portion of this is cumulative. Over the lifetime of the plan, if you click through, you'll be able to see the cumulative taxes they've paid over the lifetime of their plan. If they have a tax refund expected, you'll be able to see this up here at the top. The effective tax summary, and then federal taxable income breakdown would be here. If they are getting the standard deduction applied, you'll be able to see that here, or if you're doing itemized deductions, this will be listed out in this section. If you are in a state where there are state taxes, you'll be able to see that breakdown here in the state taxable income section. And then your state tax rates will be listed here in this section. Let's go next to our Let's See chart. So in the Let's See section, you'll be able to see the breakdown of all of your charts. I do recommend turning on the details button and then making sure that your legend is turned on. You can click hide all and just see the expense profile of your plan. These are going to be all of the expenses in the plan that are currently estimated. This is going to be everything from your goals, your pre-retirement expenses, your taxes, contributions, everything that we've estimated so far. You can start building this up for your clients to show them how your planning is going to help them meet all of these expenses over time. So you can start building it up through things like employment income, your Social Security, and then retirement savings, taxable savings, etc. And then you can move over to other charts like the assets chart. You can even pull things out like illiquid assets like the main residence. In any given year, you can hover over these charts and see what their estimated liquid assets are going to be in that year. For example, in the retirement year, these clients are expected to have $2 million available in liquid assets, and by the end of the plan they're going to have 4.5. So this client might have the ability to have some more conversations about what we can do to help them utilize those funds in their retirement years. And then moving over to some of the other charts, we can take a look at the breakdown of their expenses over the lifetime of the plan, when they're expected to pay down their mortgage, when they're expected to have different spikes in their taxes, and years where they're not going to be paying any. And then going over to their overview section, the legacy section, this can give you an idea of how their estate is going to be passing, if they're going to be subject to any estate taxes. That would be listed here in the right hand side, and then what they're expected to transfer to any heirs. You can see here in the total wealth transfer after tax, so 5.3 is their current estimate as far as what they're going to be leaving to Franklin. And then in our insights section, this is going to give you some ideas of different problem solving and stress testing scenarios that you can do on this plan for your client. So for example, for this client, I might do a retirement spending analysis on this one to see what is their max spend on this plan before they start getting into trouble, because I think that they might be able to spend a little bit more in retirement than what we're currently estimating, and they might even be able to retire a little bit sooner. If they were to spend $148,672 annually, they would still have enough to not run into any cash flow problems. And what would their assets that they would be passing over to their child? So they would still be passing over a home in the value of $1.9 million, about $197,000 in taxable accounts. So maybe we could propose a what if plan where they spend a little bit more in retirement. Maybe we don't bump all the way against the ceiling of that, but something that would be somewhere in between the $50,000 that they're currently estimating and that. What if spend more? Create a plan for them that gives them some additional options and run this by them in a meeting with them. So we give them a goal where they are able to spend a little bit more in retirement. Let's bump this up to $90,000, and we'll go to Let's See, compare plans chart view. And then we can compare these two plans side by side. You can see that even with that additional $40,000 a year in spending, they're not going to be running into any cash flow problems. And then if we go to our assets chart, you can see that there's still going to be 4.9 million in assets available at the end of the plan. And then if we go to our overview legacy section, we can compare the two legacies, base plan and spend more, just to see what the legacy that they would be leaving their son would be. And we can still see 5.3 versus 4.9. And that's with quite a bit more spending annually. So maybe that's something we could suggest to them. We could also do a version of this plan where we spend a bit more, but we also retire a bit earlier. Since they still have so much available in savings, we could do a what if plan where they retire earlier. What if spend a bit more, retire early? And then we can compare that one against the other one and give them a few different options and see what our clients would prefer. Well, we're going to go to our timeline and we're going to go to retirement, and let's bump that down to 63. And we'll bump their retirement goal up to 65. Double check that they're still not running into any red in the plan via this goal here. It's still saying 100% met. And then let's just compare plans again with this Let's See compare plans chart view. You can compare these plans side by side. Still no red in the plan. Let's see what their assets look like. Still 5.2 versus 6.4. And so you can give your clients several different options and see various different ideas, what they might be most interested in. So this is just a few different ideas of what you can do with Voyant to help your clients see a vision for their future and give them some ideas to help utilize their available assets for retirement. Going over here to reports, this is going to be how you can give your clients a deliverable. Under select a report or select a plan, you can select any of these plans that you have built, and then you can build out a report set. So let's say you wanted to do plan facts and assumptions. These are going to be the underlying facts and assumptions that are built out in the base plan. Then you can do a financial summary. This is a good overview, 1 to 2 page overview of the plan that you've just built. And then you could do a retirement summary, maybe that retirement spending insight that we just reviewed, the cash flow assets of those two plans. And then you can see up here that that has been added to the report set. And then maybe after you've had a conversation with them, they've decided that they like one of these two plans more over the other. So maybe they want to retire earlier. They're ready to get out of the workforce. And you can build out that same report set for them. Retirement spending, cash flow, and assets. And now you have a report set that's for the base plan up here, as well as this what if spend a bit more and retire early. And then you can just generate a report that shows both of those options side by side. And then that can be what you send with your clients. Here is an example of what a report might look like. So you can give your clients something to take with them to review all of the conversations that you've had with them. I hope that this has been helpful. Once you have started building one of your plans, if you have any questions or if you get stuck at any point, please do feel free to reach out to us at support@planwithvoyant.com, or you can always click the name of your client in the top right corner, hit request support, enter your question here in the text box. And then another quick way that you can also seek information in the plan itself is also if you go into any of your insights or any of the items that you're working with, just remember that any place that you see these hyperlinked underlined dots, there's going to be inline help, and we have additional information as well as a lot of videos in here that you can use to get a quick preview of how different items in the software function. Thanks for listening.